Hi, everybody. Good morning. Happy summer. Happy Thursday. Apologies for not streaming yesterday, and I think it was Monday as well. Just actually keeping busy here, some work and things with the website and just things in general. And of course, it's summer, so more activities with the fam. I will try to stream today and tomorrow and Monday. Then we'll be taking a few days off with the fam next week. And then I have Honey Badger conference coming up early August-ish. I think it's around the 10th. And then the week after that is Bitcoin Helsinki. So we'll be at that conference as well. So please, if you're planning on attending those conferences, let me know. It will be great to meet you, see you, have a beer. Did some shows yesterday with Maurizio, the Italian Bitcoiner, great guy. That will be airing soon. And then I also did my quarterly update with Marty, my buddy Marty Bent from TFTC. As you know, my European friends, and of course this is European time, I overlap a lot with Ukrainian updates, Ukrainian freedom endeavors, and just the war in general, how it's going, Russian disinformation. And then, of course, Bitcoin and the markets and economics and the money supply. I guess in some level, there are some Bitcoiners that are doing this, kind of always just talking about geopolitics and also always talking about Bitcoin. But I try to keep it a little bit more focused here. Obviously, this is where I'm from, this part of the world that's very highly, highly influenced by what happens in the outcome of the Ukraine unbelievably heroic defensive stand that they're taking against tyrannical Russia. So obviously the Baltics are highly they're going to be affected because of whatever outcome happens. But I also try to ground my work in stats and reality, as you know. Try to not get too taken away or carried away one way or the other, particularly when it comes to Bitcoin and financial freedom and stuff. But I won't show this now. I'll let a few more people join the stream. 2 nights ago, I was listening to the Ukraine the Latest podcast. It's a great group of individuals that have been supporting Ukraine since the first day of the full-scale invasion in February 2022. And there was a very interesting letter that came from a listener of the show. And I'll save it. I'll mention it a couple times perhaps during the interview. But, Satoshi liked to drop Easter eggs all through the code and through his communications, or at least there's a lot of speculation that he did that before permanently disappearing in 2011. I am a little bit tongue-in-cheek when I start talking about this, but you never know. People, Bitcoiners want something to believe in, and Satoshi was a person to believe in. Obviously, you talk about decentralization. Decentralization didn't happen immediately. Bitcoin was prima facie, by its nature, from the beginning, centralized. Satoshi started it. He bootstrapped it on IRC, as far as I know. That's how he was really bootstrapping the code. Yes, there was the mailing list, but it wasn't on GitHub or anything, and it was bootstrapped through IRC users, as far as I know, kind of a main distribution channel. And from there, we pursued this decentralized idea. A lot of people have speculated on who Satoshi is, and for sure, the developers in and around and close to the source code from the beginning have always shunned anyone going out on a limb and saying it is this person. I completely understand that, so I've tried to not do that myself. I think there probably are some audio clips of me in early days speculating, but I've tried to not do that, and certainly like plenty of documentaries do where they just finger point one person. I think at the level of what Bitcoin has become, probably, I mean, in any event, it doesn't matter, but it also does, if you really think that you know, it probably sows some meaningless attention, or meaningless is the wrong word, unnecessary attention on that particular developer or person. So obviously I try to not do that, but that's just kind of a lesson that still is hanging around from the early days. In any event, I will come back to this, but listening to the Ukraine, the latest podcast, it was very interesting 2 days ago. I'm not sure if anyone has caught this yet, and obviously the overlap between Bitcoin and Ukraine, I think there is some, as I've said from the beginning when I was in Maidan, the Maidan Revolution in 2014, of course, as a CIA agent, Westerner, starting a coup. No, when I went there to visit some friends in February of 2014, it was already on for 3 months, and it was coming to a conclusion, by the way. I saw QR codes everywhere for Bitcoin donations. This was in 2014. And Bitcoin has actually been a part of the Ukrainian movement for independence in the modern era from the beginning. So it's kind of interesting. Anyway, I'm going to come back to that. So onto the stream. I'm not going to make it too formal today, guys. If you have a question, if you want to look at a chart, let me know. I'm getting more stock data pulled in now. It's going to be, I think, a better comparison because obviously there's a lot of liquidity in equities, and particularly the largest equities. And when we look at equity trends, they're all exponential. And I think that this still has a lot of implications for how Bitcoin grows as Bitcoin grows in power. So let me put the old camera on this setting. This is kind of becoming my new thesis. As I've said, you don't see it here, but it's basically unbacked fiat money, which is the monetary base, 26 trillion at the moment, minus government gold and Bitcoin reserves, plus available gold and silver. All right, we have this. We've talked about this a lot, 44 trillion at the moment. This grows at about 7.3% per year since the founding of Bitcoin, since the start of Bitcoin. That's how it grows. Right? It was 11.6 trillion back in 2008 when Bitcoin was founded. Now 43 trillion. This includes gold, silver, fiat money. That's not backed by those same gold, silver reserves. Gold, Bitcoin reserves. There are no silver reserves in central banks. Actually, there's like a very, very small few, but it's a rounding error. Here's Bitcoin. Clearly, it's on this asymptotic, slowly rate of growth declining curve. It's not an exponential curve. And when I've been discussing this now for a couple months in this form, I've made these sort of dominance indexes before, but this is the current form. You know, we see a meeting here at about 155 trillion, early 2040s. And because the rate of Bitcoin's power growth is so fast, then one need not worry about the basic geometry of these curves. Obviously, exponential is a very, to use the word of the power curve, exponential is one of the most powerful trends. All right, it's an eighth wonder of the world, as Einstein or Thomas Jefferson or both said. It's a straight line on log scale. It's extremely powerful. But if you have one straight line and then one power curve, which is a more sustainable type of a growth, network type of a growth, it's clear that if it crosses once and it has this gently sloping curve, if it crosses that exponential trend once, eventually the exponential trend is going to catch it again. So it's a mathematical query, a mathematical question about what that means for the future. Now, obviously, I never really thought about it or thought about answering it because it's so far in the future. This goes 100 years out that most of the time, well, first of all, hopefully we're all going to live long, healthy lives, everybody watching the stream. But anyway, it's so far in the future, one just assumed that a Bitcoin standard would look different, feel different, act different, and perhaps on a power curve, the whole TradFi system would be bending to Bitcoin, so we wouldn't really have to worry about it. But I wonder if that will actually happen. And the thing that really made me wonder is if you plot Bitcoin against Apple. All right, so everything's on linear scale here. I'm going to put it on log left, and you're going to see, I'll take this off. Here's Bitcoin versus Apple. And there's only a few stocks. So I already talked about this, right, on Tuesday. I'm just revisiting. I got a couple of the charts to show too, but there's only a few stocks that are big enough now where they are, first of all, larger than Bitcoin. Remember, Bitcoin, if it was a stock, and it's not a stock, but if it was a stock, it'd be the 5th largest equity in the world right now. Just go to my website to check that out. But the growth of Apple is significant. All right. If you do the same thing as I did for our base money curve, all right, here's the base money curve, starting at 11 trillion in 2008, and now it's 44 trillion now. Let's look at Apple market cap. Back in 2008, 2009, Apple's market cap was 70, 80 billion. And this was indeed the heydays of Apple, right? Everybody had an iPod. We're moving into the iPhone. The starting date is very arbitrary, I admit, but it's also somewhat not arbitrary because I'm comparing with Bitcoin. Bitcoin's system started on January 3rd, 2009. If you look into this market cap growth, where we have 70, 80 billion in 2009, and all of a sudden we go to today, we're at 3 trillion. All right, and to be exact, it's about 3.2 trillion at the moment. What does that translate into in exponential growth? Well, it's clearly an exponential trend, straight line on log scale. You can see the actual data, then the projected data, and indeed, it can be variable. Like as I said on Tuesday, I think it was. The trend, the actual market cap of Apple is about 3.2 trillion at the moment. The trend is 4 trillion. So it's behind trend. But what is the slope of this trend? The answer is 22% per year. 22% per year. So Apple grows way faster than base money. And in fact, most assets. I mean, a 22% per year return is astounding. That's why, those that got in early and those that were buying Apple in the 2000s when it was making its turnaround, it's just almost as great as Bitcoin. I mean, it's amazing. It's an amazing stock to hold for sure. Now, stocks are different than networks. Stocks are, they're big, they're heavy, they can, be mismanaged from the top. They're more centralized, the networks, clearly by design. Even though Apple has a network, clearly has a network effect as far as its entity, more than, and a walled network effect more than most companies. It still is a company, and every company tends to economically have debt, have contracts that are based in some sort of a penalty that will work exponentially if contracts aren't fulfilled. And so that means compound growth. That means a straight line on log scale. So the question that I posed on Tuesday, and I'm still I'm grappling with this myself. Apple's big enough and it grows fast enough that if it continued, it would outpace the growth of Bitcoin in dollar terms. I'm not saying this is what it has to be, but if you follow the math, this is what it is. It's just like I'm not saying, if you go back to the base money, that everybody's going to trust enough of these currencies to keep using them, to keep getting more and more in this financial panopticon. And we go from 48 trillion to, again, this is a 7-year compounding, so roughly doubles every 10 years. So if we go out to 2035, it's going to be 100 trillion. There it is, 2036, 2037, 100 trillion. I'm not saying it has to do that, but this is what the math says. And so if you put the Bitcoin dominance on now, you get a very interesting thing where it crests, as I said on Tuesday, much earlier than base money. Base money is a very slow, you cross 100% here, you get larger than TradFi money here. And you actually see it does crest here with this math in around the year 2090. And so that percentage will fall. But again, just extrapolate out in your head. If base money would continue to go larger, at some point this will cross back down again, and eventually it will go to zero. That's just what this will be, like a bell curve, just like this. See, eventually it goes all the way back to zero. Just to show you how it actually looks, this is, obviously the Bitcoin price against the Apple market cap. Sorry, the Bitcoin market cap against the Apple market cap looks just like Bitcoin price action. We're ahead of trend here because Apple's a little bit low on its trend. But Bitcoin is moving in power. Apple is moving exponentially. This is a query. This is a question. And I'm not, it's more hypothetical. I'm not rhetorical, I should say. I'm not saying that I know the answer. When I was talking to Marty on his show, I caveated saying, I did not look at Apple's stock price and market cap movement thereof. Of course, it's going to be the same thing since the 1980s. I only looked at it from the life of Bitcoin. And I presumed that Apple's price, if you move back from the 1980s, remember they had dark days in the 90s and jobs left and everything, I presumed it would be flatter, a flatter curve, a lower curve, and it's possible that Apple could return to that curve, which is lower. But I did the math on it, and I'll show you right now. Here's Apple since the 80s. All right, this is market cap. Sorry, this is wrong. This is again why I don't put things immediately to the website. This is market cap. No, this is stock price. Stock price. Sorry, again, got it right. Stock price. All right. Actually, could go a little bit further back. I think because the fundamental data I only have since September of '85, but Apple was Okay, just update this really quick. When is my starting date on the price? No, it's the same. It's the same at the moment. I can update this a little bit more, but it's not going to change much. If you just use your eyes, you see that Apple moves sideways almost from late 80s until the 2000s, right? Then the iPod, the birth of the iPod, really takes Apple to a new level. iTunes, and then the iPhone after a dip from the global financial crisis. And if you look here, it's pretty steep. This is I don't know, this is log scale I put, but obviously this looks like a straight line on log scale up. All right, but anyway, let's take all of the old days of Apple II. Let's draw a regression. We get a 90% R squared. Okay, so it's not as good as here, which is a 95% R squared from 2009. But back to the 80s, it's a 90% R squared. Here, all right, unlike market cap where we're under trend, all right, I know I'm not drawing the trend line. This is my simple chart here, but we're under the trend line here, you can see. Here, we're over trend because it's a shallower trend, right? But having said that, after all is said and done and the data is entered, it's about the same. The slope of this trend line is about the same. Let me pull it up exactly, but I think it's as much as like a decimal off. So the slope of this exponential curve is 22.6% per year. And the slope of this market cap curve since 2008 is 22.1% per year, which is crazy. But that's what the math says the best fitting trend line is. Because this is so low, these prices here, and then it's so high now, it's pulled us up to a high level. Interesting. In any event, let's see where we are on let's say we are on the bands. So just like I have this for Bitcoin, I'm gonna do it for Apple, but now this is on an exponential. So here's the full extremes. I'm using my multiple analysis. Be very, very rare. Okay, I'm gonna take the trend line off. So here's a full trend line. Remember, now these are sort of multiple base analysis. So the trend at the time was here, exponential. Then it went flat. Then it went up. And obviously, remember, I'm starting 2009 here. You got a lot more room to accelerate if you go back to 2004, right? Even with all this flat data here. So that's how the math checks. The price would never be outside these bands, okay? As you see, it hit the top based on a multiple in 2007, just before the crisis. Lowest was here. Kissed it in the mid-90s. Dark days before jobs came back. These are very extreme numbers around the trend, okay? Probably something better like the 10th and the 90th. So I'm going to actually even take out these wide bands. I'm going to put in the all-time and see where we are there. This is harder. By the way, Jim Simons, who just died recently, I'm forgetting his firm name. Renaissance Technology. He started it in 1982. Jim Simons. by all accounts, a super nice, smart guy. I have no inside information, but I've heard him talk about their method. He was a very math-based. I mean, he was one of the geniuses. He was talking with physicists in the 80s and 90s, even on like string theory and stuff. Super smart statistician. Started a hedge fund, became a billionaire. He basically did a more advanced version of this, of trend following, but not just lines on a chart trading view style, actually doing the mathematical trends. And of course, I'm sure they were doing it very frequently, 10-day trend, monthly trend, yearly trend, whatever. But mathematical applied. And I know that they did it because I've heard him describe it. And he said basically it's applied statistics. And so it's something like this, in a very crude way, obviously. Apple is not as reliable as Bitcoin. We'll go back to the Bitcoin trend here in a second on price. But if you just look at here, we're not even extending it out. We're just looking at all the data. We've been on a faster, the actual sort of evolving trend line at the moment is even faster than the all-time trend, which is pulled down because of the 90s and the 80s. So we're above the all-time trend. But anyway, what it means over the evolving trend line basically is which is this, the evolving trend line will evolve into this same trend line at the last point, which is $152. So the price now is $213. Let's find something that's pretty close to that. We can't actually. It's somewhere between the, wait, no, sorry. Maybe I put the regression in the wrong way. I think I did. There. Yeah, I actually put this on the wrong level, but anyway, let's go here, here, here. All right. So these bands, the regression is kind of at the wrong point in this list, but don't worry about it now. All-time price, which is also the same thing as the evolved regression on the last day. I pulled this data from like 3 days before, even though it says today, so it might have changed in the last couple of days. I haven't even checked, but let's say roughly $210. The trend is still only 150. And so we're well above the 20th, 30th, and 40th percentiles, which is roughly from 0.7x to 1.2x the trend. We're even above that. Yeah. Sorry. These yellow things, I'm not really, it's not the greatest presentation here, but we're between the 40th and the 50th percentile right now, the current price of Apple, $213. So between the 40th and the 50th percentile. So in terms of percentiles, we're right in the middle, And if you look at how, the extreme percentiles go, again, right in the middle and nothing extraordinary. Not as predictable as Bitcoin, as you see. This is obviously kind of wild, and the all-time trend doesn't really match. All right, just to show you what I mean for those that have never seen my channel before, let's pull up the Bitcoin all-time trend now and show you every 10th. Just give me a second. Here's the Bitcoin all-time trend. Right there. again, the extremes, literally the lowest ever recorded on a multiple basis, the highest ever recorded on a multiple basis. These are never really going to happen again, in my opinion. 0.1x the trend or 7.8x the trend, so I'm removing them. So then we get this rainbow. Most of the time we're in the rainbow. All right. 80% of the time we're by definition in the rainbow. But the trend still, as you see, it evolves. Imagine the actual power trend at the time. It's in the middle of this rainbow. Right? So that's how this model works with this ribbon. All right. But since about 2016, we've been on this power trend. Good morning, Anders. Yeah, I mean, my main observation of following Bitcoin for so long compared to stocks is that Bitcoin is much more reliable. It's a much more liquid market. It's a much more, I don't want to say the word predictable because then people think you definitely know what the price is going to be, but it's just got a deeper level of pattern than Apple. Good morning, John. I don't know the answer to that question, to be honest. I really don't. And I wouldn't worry about that personally, because then you get into the trading view stuff. You're thinking about where were we relative to the 1 month moving average or the 9 month moving average. The beautiful thing about this trend is these percentiles hold. So let me try to explain this again. Let me try to explain this, right? Look at from here to here, right? Look at how, I need to give you more room so you can see the tooltip. Look here to here, right? From about the end of 2016 to now, even though I evolve the power trend as it grew, okay, so imagine, again, I'm not showing it on the chart. I could draw it, I could show it, but imagine the actual trend line of Bitcoin, kind of like the tangent, right, as it grows. It's in the middle of this rainbow. That's what's happening. But you see that the evolution is almost the same as the prediction, right? So here's the smooth prediction. The evolution is so amazing here, especially here. Of course, yes, as Bitcoin found its footing, it was way hot here. Trolololo, who was a guy, Bitcoin Talk user that I modeled this after. He was doing this stuff in Excel in like 2012 or 2013. He was looking at a logarithmic curve because Bitcoin was moving very, very fast, like explosive at the beginning. But it's logarithmic doesn't fit it as well. Power fits it better. So it went really fast, then flattened, faster again in 2013, flattened again. But really, after that 2017 run, it's gone on this smooth trajectory. And I, for one, believe it. Again, not financial advice, but I wouldn't concern yourself at all about this now, because if we now put the all-time trend back in, look at that. I mean, it's the bands that evolve are right around the all-time figure. And to me, this looks like fair value. I mean, it's right in the middle. If someone's going to, give me a bearish prediction that this is going to be top, yeah, in the next month, could this fall back down to 70K? Totally possible. I have no idea. There are more shorts out there than ever before. There's more Wall Street bets than ever before. But I'm not worried about any of that because I think this is indicative of Bitcoin's adoption. I know I've sound like a broken record when I keep saying that, but to me, there's just nothing better here. Now look at Apple. First of all, Apple's a completely different curve. All right. I got to clean this up a little bit, I know, because my power's not, or my exponential's in the right spot. But so the rainbow's here, extremes are here. Take them off. It looks pretty good from here. from 2005 or so. Looks pretty good. But Apple is a company. Um, they got a lot of cash still outside of the United States, and President Trump wants to tax them if they don't bring their iPhones back in onshore. And it faces a different set of growth challenges than something like Bitcoin, which is a network that can't be stopped. No, nothing, definitely nothing silly. Nothing silly at all. I'm trying to repeat for listeners as well. Like, I'm not a trading view person. I don't swing trade or go for the short term. Like, the weekly moving average said this because of a wick here, and the candle chart looked like this. There's a lot of voodoo there, I personally believe, and I just don't spend my time on it. Some people make money that way. More power to you. Good morning, CS. So we're gonna have to see if they break. I mean, this is a good question. Let's look at the growth of fiat money. Hold on. Let me show you the actual trend so you can see it better. So stripping out gold, stripping out silver, if you only look at the trend of central bank money, which is the economically analogous money supply to Bitcoin's UTXO set, I hear what you're saying, but look at this. I mean, fiat money was only 150 billion 55 years ago. Now it's 26 trillion. The trend says it should be 35 trillion. We're way off trend. We're actually way under trend right now. I don't see anything here per se that shows this would break. It certainly doesn't look like it's going to break to the downside. Other currencies getting weaker in terms of the dollar. This 55-year trend. Thank you, John. We're at fair value. I mean, we're at fair value right now. And when we get below fair value and you're in buying mode, I would view that as a discount, as a good buy. But your question here, I think, CS, is very important because you are right. Exponential curves do break eventually. Although I also mentioned this to Marty on his show, and I know I've talked about this book, but Scale by Jeffrey West. All right, I recommend everybody read it. This is like a 10-year-old book. It's a 10-year-old book, but the universal laws of growth, innovation, sustainability, and the pace of life in organisms, cities, economies, and companies. So where was my exponential curve? The idea that he puts forward, and I'll just try to be very brief here, is he uses this concept of running from a treadmill that is moving pretty fast or at a certain speed. And then when we adopt, when we evolve, when we have an industrial revolution or whatever, our rates of growth increase and we jump from one treadmill to the next. And we've basically been doing that in, depending on how you want to, time this stuff. He's comparing it with Ray Kurzweil's singularity. But what he says is, you can imagine before agriculture, we were here. We get to agriculture, we move here. We get to whatever. Maybe the next step is only the printing press here, industrial revolution here. Oil major gushers here. Off the gold standard here in a bad way because fiat money inflates. Digital revolution here. So what he calls it is super exponential growth actually is what he observes in the world. All right. The guy a lot smarter than me, statistician. I would recommend the book. So he calls it super exponential growth as we're jumping from one treadmill to the next with each innovation. This is clearly one epoch. We have not morphed from one to the next, even with the massive money printing in 2008, 9, 10, 11. We're still on this pretty solid 99% R squared curve. So I don't think it's imminent that something's going to happen. That's like just my take on that part. I've heard of different versions of the Great Reset, but I'm not sure if I understand which one you're talking about. But we're still growing exponentially, but the rate of that exponential, it's like going like this, I guess. But I shouldn't speak too much. It used to be as high as like 2%. Now it's down to like, it might be even under 1% right now. It is slowing, but I think it's still this, as far as I understand. I guess I could just ask Gemini here. And everybody else can do that now with their own chatbots. Oh, interesting. Maybe I stand corrected. It's not currently growing exponentially. While the global population is still increasing, the rate of growth has been slowing down since the 1960s. Even if it's 1.1% per year, this is my question next. I'm not using ChatGPT, so I don't know if it's going to remember. That's funny. There's your hallucination for the day. So we're not growing exponentially, but 1.1% annual population growth is indeed exponential. I think the general conclusion is that the rate of growth, the rate of exponential growth is decreasing, but it is still exponential. But again, I'm not a demography expert here. I'm not going to claim I know, but anyway, let's hold on. I just want to finish the thought on the super exponential growth versus. So Jeffrey Rest talks about how it seems, right, going back to the example of agriculture, printing press, industrial revolution, oil gushers, higher economies of scale, factories, and then eventually, digital revolution. At some point, first of all, when we jump from one treadmill to the next, it's always a little bit quicker, right? The time dilation between the next epoch is faster. There's less time dilation. It's quicker, right? Sorry, it's quicker to jump from one treadmill to the next. So eventually, you get a mathematical singularity. If it just comes to the point where the tangent is so quick from one epoch to the next, it doesn't really make sense. We're at a mathematical singularity. It's different than Ray Kurzweil's singularity about whatever that's going to be if we're not humans anymore. But what he thinks is, at that point, he doesn't really, he kind of leaves it open, as I guess all good writers do, right? But as I understand it, his conclusion was that either the system would break at that point, or we have a paradigm shift and some completely new technology, rate of growth, something happens or occurs. And I think it's a beautiful hypothesis that Bitcoin could be that paradigm shift. But this gives me a little bit of a hiccup. I'm going back here. No, here. I think it's just interesting. There are not many companies in the world that can do this, but Apple is one, Microsoft is one. I'll do NVIDIA. We'll see. Um, it passes it. Bitcoin's bigger, but then it's quickly smaller again. Past performance is not future. Don't let your biases take over here. I'm not saying, look, Bitcoin could be better for both situations, right? Because as I'm currently theorizing about this idea is either one, first of all, you can't have things not grow together, right? Like if it's something as important as money, and Bitcoin is, everybody's using Bitcoin, things get cheaper in terms of Bitcoin. Obviously, Bitcoin as money is going to be part of the story. But you can't have a few assets like Apple stock just growing way proportionally larger than Bitcoin or disproportionately larger than Bitcoin because why hold Bitcoin at that point? You just hold Apple stock. So my theory would be, and I think this has to do with, again, the hyper-Bitcoinization, not the hyper-Bitcoinization story, the Bitcoin standard story, is either TradFi, including Apple, pulls Bitcoin exponential, or Bitcoin pulls TradFi power to this more asymptotic, slowly growing curve. I don't think you can have both. I don't think you can have this if Bitcoin is still around. Wouldn't make sense. I think you can clearly have stocks priced in Bitcoin, everything priced in Bitcoin, but as we know, you literally have less and less Satoshis to go around every year to pay interest. So your debt contracts are going to have to be reworked in this case. And you can see it mathematically. The rate of growth of your interest, constant compound interest is totally possible in a situation like this. Theoretically, no limit to the money, even though the money itself is not that big, 26 trillion, and then deposits worldwide can be like hundreds of trillions. It's not impossible to deal with, but with Bitcoin, it's impossible to deal with because there's literally a limit to the Satoshis. Yeah, you can have paper Satoshis to pay up a made-up loan, and that will happen. It's already happening to a certain extent. But that can't go on forever. So anyway, I'm theorizing out loud to all of you. This is another thing for sure. Richer societies grow less fast. Also, richer societies have less war, which is something I really wish that the Ruskies could get to, but they're very far away. I think the number is 30,000 or 35,000 GDP per capita, where you just generally, I know it's a little bit of a different thing than imperial wars, but it's just generally, the society doesn't want to go to war over $35,000 per capita. Russia's 15,000. Anyway, so Bitcoin is just great. It's still great. It's predictable in terms of dollars. It's, again, predictable is a loose term. I'm not saying I know the price tomorrow. This is pretty predictable too on an exponential curve in the last 20 years of Apple. But if you pulled it out and use the all-time trend, it's a little bit flatter. And this may be the wrong trend for all I know. I mean, maybe you just don't know. It depends on your starting date, right? But this is Apple. That's how it looks. All right, we can come back to some charts, but I want to read what I've been teasing about from the top of the show. Again, if you just tuned in, I know I'm maybe one of the only commentators who blends Ukraine commentary with Bitcoin commentary, and most of us probably live in Europe that are watching this at the moment. This is more fun than anything, but this was a very nice comment that was made on this podcast, which I highly recommend if you follow Ukraine. I'm going to read it because my audio settings are not great. So I'm going to read it as I play it. You're not going to hear anything. At least you shouldn't have to hear anything. I'll even turn the sound off just in case. Actually, tell me if you can hear it.
Letter from Satoshi in Kyiv, who writes as follows. As a
Does anyone hear
Belgian
this?
and Canadian citizen with Japanese ancestry, I live...
Probably not. All right. So this is read by Francis. His name's Francis Sternley. He's one of the great journalists for Ukraine, the latest. He got a letter from someone named Satoshi in Kiev who writes as follows. I'm going to revisit a few things here, but as a Belgian and Canadian citizen with Japanese ancestry, I lived in Switzerland, Canada, and now in Ukraine. Upon the commencement of the invasion, I made a decision to support people fighting for freedom and relocated to Kiev as a volunteer. Like many foreigners, I find myself more comfortable in Ukraine than abroad, likely due to the fact that when an air alert is issued, I can simply glance out the window. Am I on 2x speed? No, but I'm going to do it slightly slower for effect. I can simply glance out the window to ensure that everything is under control in my immediate vicinity, and the army keeps doing an incredible job protecting us. My mother endured devastating bombings on Tokyo during World War II. Notably, she narrated to me how some of our school classes were conducted in a bomb shelter, although she continued to struggle to articulate the events of the bombings of March 1945. Her family refused to contribute to Japan's war of aggression. Ultimately, they lost their business and a house and were forced to relocate to a small apartment. Better die with your values than live with someone else's. 80 years later, one can see the cost of bravery in her eyes, as well as the rewards in her heart. With that in mind, your work is giving voice to Ukraine, and it is invaluable. He's talking about Ukraine, the latest, a historical record. You reflect very well the resilience, courage, distress, humor, and love of good food of the Ukrainian people. I'd be interested to hear more from those who usually go unnoticed. I admire Ukraine's punctual train service, surpassing that of Western countries. Additionally, the rapid electricity restoration after a strike is noteworthy due to its complexity. I also think the street vendors deserve recognition for their resilience. My life is a well-protected one, relatively comfortable compared to those who cannot leave the country, have to make a living, or have loved ones in temporary occupied territories. I feel privileged to be able to witness the hardship firsthand, spread the word, and help a little, although I'd like to do more. Before my spouse died at age 36 of cancer, she taught me bravery and empathy. Despite the pains in her bones and despair, she was the one supporting me. Among other things, she told me that things would be fine in a world after her. She was mistaken on that one. I miss her. The world misses her as much as the world misses people like David. Perfect. I'm not even logged into my other account. Give me a second. David, by the way, David Knowles was a founder of this podcast, and he passed away last year, I believe, but worked for the Telegraph. Since that time, I found solace in knowing that witnessing a loved one die in a war is worse than by sickness. My thoughts and actions go to survivors and to all who fight for the freedom to create sense in one's universe. And he says, thank you very much, Satoshi. So that's Francis reading a letter from a listener of their podcast. This was very interesting. I mean, to me, of course, the guy's name is Satoshi. It's I don't even know how common necessarily it is in Japanese. But look, this is slightly tongue-in-cheek, but everybody wants Satoshi to be someone no one has any idea. Still, the coins haven't moved. But remember what he said. First of all, just a couple things. Satoshi wrote in British English. Okay, Satoshi embedded into the Genesis block the Times of London, and he also embedded into the Genesis block the Times of London print edition. All right, and people have theorized whether he was actually in London. You also could get it in mainland Europe. As far as I understand, it was not. That edition that he posted that day on January 3rd was not in the U.S. If he was in the U.S. or someone sent it to him from another place, of course, that's totally possible. The digital exhaust would be there. It depends, there's ways to send messages and do your best to delete them. But, encrypted tools might have not been as good if people really looked hard. Who knows? But what he says there, as a Belgian and Canadian with Japanese ancestry, I lived in Switzerland, Canada, and now Ukraine. I just put this in. Again, we just saw how accurate Gemini was, but just for fun here. The Switzerland get the print edition of the Times of London. They do. This information only goes back to 2010, 2011. All right, so it was 2009 when Satoshi put the Times of London, January 3rd, 2009, in the Genesis block. Someone have to do bigger research there. Remember, we talked about this on the show. There is a Belgian connection to Satoshi Nakamoto. Now, some have speculated it's Len Sassaman, who is dead, died in 2011, which is also interestingly, died by suicide in 2011. This is all interestingly around the time Satoshi died, although I'm not sure about the months or dates, and I'm not even sure if that speculation is there. Again, I said at the top of the show, I'm not trying to demask Satoshi. This is an interesting thing if you really follow Bitcoin and follow Ukraine. The reason Sassaman was picked out was first of all, if you look at citations 2, 3, 4, and 5 of the white paper, these are all advanced cryptographic papers. Most of them were spread at this symposium in Leuven. We talked about where Sassaman studied, but also plenty of other people have been there. But as I understood, that they were still in the library in Leuven, and these were not really accessible online in 2009. In Canada, they use British English, British spelling. They don't use my limey bastard American spelling of like favor without the U. It's interesting. It's interesting. I don't think I just like to pick up little Easter eggs like that. I don't think anybody in the world would have caught this who has a keen eye to what's happening in Ukraine and a keen eye perhaps to Bitcoin. But I think it's very interesting. It's a nice story. And it's a great podcast. People working very hard to bring the the ideas of donating, helping all of the challenges that are happening politically with this war. But it's a really, really great show. It's with the Telegraphs, not with the Times, but I do think it's a very, very interesting story. Here's an angry message from Gerald. I do know what is going on in Ukraine. I have friends there, been there many times. It's terrible. But they're not going to go under the Russian yoke anymore, just like we're not going to go in the Baltics. So, yeah. Definitely an unstable world. You know, you have old Trump. He's gone the full gamut. It's now 3 times that his juvenile Secretary of Defense, Pete Hegseth, has gone around his back, canceled Ukraine aid, and now they're walking it back. It's very sad. Ukrainians aren't even asking for soldiers. They're just asking for weapons to defend themselves. And you know, in Europe, we're going on vacation and thinking about Bitcoin price. Every day, the kids there, they're studying in bomb shelters. It's unbelievable. Yeah, thank you, Tim. So here we are. Another reason, going back to your comment, CS, here about exponential curves, and another reason why I think, let me find it. I think we got at least some time here, even if we get on the super treadmills, the super exponential growth, like moving to the next level soon, which is faster as Jeffrey West points out in scale. Let me find it here. Where is it? And I've shown this one a bunch, but we have time. So if you look at this one again, this is basically the monetary base of the United States in the dark green. All right, this is debt of the United States in the light green. Haven't updated this since May, but right, they're still shrinking the balance sheet. This is the asset side of their balance sheet. I've shown this many times. It'd be much better. I'm not cheerleading for this turning around, but it'd be much better if this would go to zero. And certainly, the United States didn't have a central bank before, and even in the World War I, they weren't buying. The Federal Reserve itself wasn't buying bonds too much. All right, but that really changed here in the post-World War II era and Vietnam, and moving into this era, of course. But if we talk about that exponential curve that might break, I think, at least, again, my opinion would be that we would be more at risk of that if we were at central bank money printing levels at an all-time high rather than moving back to low. It's still high. It's still disastrously high. And good old Trump with his more spending bill is going to take it higher, which again will be fine for Bitcoin. But, we still have this invisible threat of inflation, price inflation that Bitcoin has to deal with. So we have room to go back is the point. Again, not that I'm saying we should go back or I want it to go back for the Bitcoin price to go up, but just in the US alone, that's the situation. And I do want to get more of Europe here, for sure, to show like European debt. Bitcoin was made by the NSA. Possible. Buy Bitcoin, don't look back. So that's where we are. Exponential growth is fast. Remember, I mean, this is, if you just look at the numbers alone, it's incredible, right? I mean, I remember very well when Apple was moving into the iPhone. I mean, under $100 billion market cap, right? Now they're 32 times that. You translate that in exponential growth, that's 22% per year. It's very fast. Very, very fast. Doesn't mean it continues. But that's where the data is showing today. Thank you, sir. Appreciate it. Yes, they are. It's very scary. It's very scary for us. They might try something. Anything is possible. My understanding is these exercises are going to be a little bit smaller than originally intended. But yeah, everybody's paying attention and preparing for it and trying to keep a cool head. I don't know if you've seen things on Twitter, particularly in Poland. Poland gets hit very hard with this, but they've been trying to take migrants from all over Belarus and push them across the border into Poland to cause political problems. They do that every day. Obviously, we have everything that's been happening in the Baltic Sea, all the cables being cut. It's very, very serious. Morning, Fred. Can't sleep? The beautiful thing about Bitcoin is we don't have to trust. But unfortunately, yeah, we're in a world where somehow people think an autocratic dictator for 25 years is somehow preferable than defending a Christian nation of 40 million people that never invaded anybody since 1990. Yeah, you don't even need to trust. Just verify, right? The old Reaganism turned on its head. Not trust, but verify, but don't trust and verify. Fred, I don't know if you've seen this yet. This is one of the ones I've been looking at, which I think is interesting and hard to explain. how Bitcoin will look here, but if you look at the money, all the money in the world, Bitcoin pretty easily passes it because it's only actually growing with dollars. The dollar value always accreting against other currencies, and even if you put gold in, it's 40 trillion. Bitcoin pretty easily passes it, even on the power curve, 150 trillion by 10 or 15 years from now. That's what I think. And probably even before then, we get on some sort of a more Bitcoin standard. But if you do this with a few large stocks, in this case, Apple, right, still on an exponential trend. It's a huge trend for Apple, and it's a huge stock. Even though they're well under trend at the moment, right? It's the actual market cap's about 3.2 trillion. Trend is 4 trillion. Still, if you extend out the Bitcoin market cap, it's the math wouldn't work here. So I'm theorizing what this means. It either means TradFi will bend to Bitcoin, or Bitcoin will bend to power. Sorry, Bitcoin would bend to TradFi, meaning TradFi would bend to Bitcoin, turn power, or Bitcoin would bend to TradFi, turn exponential. I think it's probably fine in whatever world we're in. Units will change depending on the lens of the money that you have, but there are a few large companies that are challenging Bitcoin here. Probably. Here's M3. I can pull out M3. I don't have M2 actually set up. But anyway, the broader money supply, which is M3 and includes all institutional deposits, which definitely people should count, is here. And you're probably not even 20% of that. So here in 10 years, we're 30 trillion. Let's call it $30 trillion Bitcoin in 10 years. Here's your broad money. This is only top 5 currencies. Okay, so here I have for base money. I don't even have base money. For base money, I have all the currencies. It's 26 trillion. This broad money, 115 trillion. This as well will double in 10 years to be, roughly 230 trillion. Let's just call it 250 trillion. So $250 trillion equivalent broad money with deposits and all the fancy instruments that Wall Street likes to do. Bitcoin is 30 trillion in 10 years. So 10% of M3 money. I get all of these points. Bitcoin doesn't have to be the biggest asset, but what happens to this part? Because I can show you, for example, like another mid-tier asset, which is an asset that I appreciate, being an old Cincinnatian. But it doesn't really matter for things that are roughly the same size or grow slower than Bitcoin, like this, right? This is all base money in the world plus gold, silver. Even here, this is base money's only growing at, if you do add in the gold, silver, whatever, it's only growing at 7% per year. This passes pretty easily. And even though this is obviously geometry, it's going to eventually, the exponential curve will catch up to it. We don't really think about it. We just think the Bitcoin standard, will change. It's a philosophical question. It's the same if we just use a different example, like just a very basic stock, Fortune 500, P&G, right? Bitcoin's already bigger than that. Bitcoin's bigger than most stocks in the world, but 5 stocks. Doesn't really matter. It's way bigger, it's longer. But there are a few, what I'm saying is there are a few stocks where the phenomenon will be quicker and you get this weird, it's just simple math, right? I mean, I know you understand it, but we have an exponential function versus a power function. It will crest sooner versus something that's much larger and grows faster. Plenty of catchphrases about predicting the future here, I guess we could say. I think Bitcoin does well, as we know. But my question is, how does that, if everything's denominated in Satoshis and the rate of growth of Bitcoin relative to the rest of other systems will grow, but slowly its rate of growth will decline. And people are paying to get transactions into the Bitcoin network. Will we just completely move away from debt contracts because you'll have less and less interest to pay, Bitcoin interest to pay Satoshi denominated debt contracts? Or does Bitcoin morph into our current TradFi system? And then we just have a lot of Bitcoin certificates on top of regular Bitcoin. I think that's the question. Because here, even if we're at $150 trillion of base money in 2040, Bitcoin meets it. Bitcoin's just growing still at such a, Bitcoin here would be, where's the growth rate? I have to put it on log. At that point, Bitcoin would be growing at 18% per year, still better than any stock return, except for Apple, right? Because as we know, Apple for the last 15 years, as I've been talking about on the stream, has grown 22%. But in this perspective, you don't really think about it. Yeah, money's, you kind of use it when you got to use it, but most of the time you're going to be in stocks. You're going to be in bonds. So Bitcoin's still way better. It only gets to 10%, as you know, around 2070. But there is this inflection point, a natural inflection point that occurs when one asset grows in power and one asset grows in, or basically the whole TradFi system grows in exponential. Yeah. I think it has to be one or the other. I think. It's interesting, though. I could take top 5 stocks and sort of graph this or whatever, but even individual stocks, gold has pretty much outperformed, or not outperformed, but is bigger worldwide, which is interesting. And gold's going to continue to grow too, exponentially. But we got $20 trillion in gold now. So if you guys want to see more detail here, You see it on my site. All right, I have gold, top 10 fiat currencies, silver, and Bitcoin. You see Bitcoin's number 6 here, 2.16 trillion. The next up would be the Japanese yen. Their monetary base is $4.47 trillion equivalent. And if you want to see the stock layout, it's also on my site too. So here we have Bitcoin. Number 6 just fell back behind against Google. It's been neck and neck with Google these days. So 5 or 6. All right, guys, I'm going to do some stuff here this week, summertime. I hope everybody's doing well. Always appreciate any donations, value for value here. No subscription is my style. You can just donate to my BTC Pay. It's right here on my website. Yeah, that's also true too. It's a good point. It's a very good point. I'll mention this next time. Definitely. Overall, everything. It's that faster treadmill, I think, as Jeffrey West was talking about. We move from one phase to the next on a faster, as he calls, super exponential growth, a little bit faster each time. So that's going to affect it. Thank you, guys. Thank you, John. Thank you, Anders. Thank you, Tim. Good night, Tim. Do PayPal. I don't want to be beholden to that system. Thank you, guys. Thank you. Appreciate it. Take care.